Good evening, everyone. Good evening, everyone. I was going to give a few minutes for people to sign in, and then we'll get started. In the meantime, if you have any questions, you can put them in the Q&A, or if you just want to say hi, you can drop your message in the chat. Or if you'd like to speak, you can raise your hand, and we can try to figure out to give you an opportunity to speak as well. Kartik, yes, 1 second. Where are you? Give me 1 second. There you are. I think you can speak now, Kartik. Go ahead.
Hi, Siddiq. How are you?
I'm doing well, Kartik. How are you doing?
Great. Yeah, very good. Siddiq, a quick, since we were waiting for you to get started, I've just generally wanted to get your opinion on one quick question. So for the last year or so, I have, been thinking whether I should, get more real estate exposure last 6, 8 months. And given where the interest rates are and the way property prices have gone up, I've sort of been sitting on the sidelines. So just wanted to get your view on A, do you think 5% is a good time to take a mortgage, and B is our prices at this point, you see them sustaining or going up further? Because honestly, I have been telling people that SmartCrowd is the way forward, is the way to go, because it's hassle free. Anything else you do has a lot of hassle, so making 7.5%, 8% is good. So my question now is, at 5.5% or 5% interest rate, does it make sense to buy more real estate in Dubai at these levels? Your thought.
Good question, Kartik. We're going to just dive right into this now. But just before we get into that, a full disclaimer: this is not investment advice. This is just my personal views, not the views of SmartCrowd by any means. But so this is a challenge a lot of people have faced, even sometimes I face, right? And it doesn't come just with real estate investment, but investments in general. You can never time these things, right? What's important is whatever investment you make, you spend time in the market, right? To distill this thought, let me give you a couple examples, right? Timing the market is very difficult. People will always end up losing money because you can never time this to perfection. But what you want to do is you want to spend a lot of time in the market, because if you do spend a lot of time in the market, you will make money. So what's important is you want to make sure whatever investment you make, you do it in a manner that gives you holding power, which means you can spend a lot of time in the market and not get desperate at the whims of what the market does, right? Because I cannot predict what the market is. Today, you might buy something at 5.5% mortgage. Today, the yields are attractive, but tomorrow, God forbid, something happens and the yields come down, and then you cannot, sustain your mortgage and so forth, and you get desperate and you have to sell at a loss and crystallize your losses. That is something I would like to avoid completely, because then you're not giving yourself the holding power to hold through different cycles, because we cannot predict the cycles, how long the cycles will be, and so forth. So whatever you do, you need to do your analysis and stress test this, right? So what happens if my rent drops 20%? Can I still sustain my mortgage through the rent? Would I have to subsidize from my income? Do I have that capacity to do so? If the answer is no, I would avoid it. But if you think you can sustain it, then by all means go ahead and do it. Obviously, leverage plays important role in making returns, but if not done properly, leverage can also be detrimental to your investment portfolio. So that's very, very high level thoughts on this. So we can obviously have a more in-depth discussion later on. I don't want to take away from the webinar specifically, but we will have a Q&A section later on in at the end, and we can touch base on some of these things. Excuse me a second. The view is just. Oh, sorry, some technical difficulties on my side here. What are you looking for? Okay. Great. We'll come back to that article, okay? Thanks for the question. It was a good one. So there's already lots of questions coming in. We'll address all these questions. This is the whole reason we have this webinar planned today to navigate the Dubai real estate market, right? It's quite interesting because we've been doing this for a few years now, and it's amazing to see people's reaction and so forth, because we've seen it through the 2014 down to the trough in 2020. And then this rise in terms of what kind of questions people ask, the sentiment and so forth. It's quite fascinating. But so it's a learning opportunity for all of us. But before we get started, let me make a couple of introduction. But before we do anything, most importantly, disclaimer, all right? So this webinar is hosted by SmartCrowd, joined by our guest from REIDIN, Ozan, who I'll introduce in a bit. SmartCrowd is a financially regulated real estate investment platform, registered in the DIFC, regulated by the DFSA. This webinar is purely for information purposes. Nothing in this presentation or webinar should be viewed as investment advice. Always do your homework before you make any investment. This is purely sharing our views of the market and for educational purposes. We encourage everyone to do their own due diligence, seek professional investment advice before making any investments whatsoever. Here, we're just here to walk through the different dynamics of the market, share our opinions, what we are seeing, and offer a little bit of wisdom to people and have a dialogue with the audience. So with further ado, let me introduce my dear friend, Ozan, who is from REIDIN. REIDIN is a proprietary data provider for Dubai real estate transactions. We've been using REIDIN for almost 4.5 years, almost 5 years. We are very data dependent organization. All the decisions we make that we do around real estate investments and so forth is driven by data first. Second, our views on how we interpret the data and analysis. It's not like we feel this is a good property, so we make an investment decision. It's very much driven from data, and REIDIN is a big part of providing that data. Ozan, if you want to make a quick introduction about yourself and give people a little bit more insight into your background and REIDIN's background, that'll be great before we jump right into it.
Sure. I think this is the fourth webinar we are having. Not webinar, but we had face-to-face meetings as well. My name is Ozan. I'm the operations and research director at REIDIN. We are a data analytics company, heavily working on the real estate. But our focus starts actually whenever there is a location information. Whenever we are able to collect, it is it falls into our focus. As Siddiq mentioned, we collect data from governmental organizations, private organizations. Even we do we have our own field team where we check each and every building in Dubai, Abu Dhabi, and gather key information such as transactions, sales prices, rent prices, listings, occupancy rates, service charges. And ultimately, on a subscription-based platform, we provide the information to our clients to make in-depth analysis. Apart from that, we also produce real estate indices in the last 12 years. So if you want to see what has been happening with the prices in terms of both sales prices, rent prices, gross rental yields, area-wise, we are able to provide all this information to our clients.
That's perfect. Very excited to have you on board. I haven't spoken to Ozan in some time, so it's good to reconnect after some time. Just as a background, SmartCrowd, for those who don't know what SmartCrowd is. SmartCrowd is a digital real estate investment platform where we allow micro investments into real estate. What does that mean? Is we allow people to invest as little as 500 dirhams to own a piece of property. We have a digital platform. It's online. You can go check it out at smartcrowd.ae, or there's an app, SmartCrowd AE, where you'll create an account and you get access to our marketplace where we have pre-vetted investment opportunities, and you can pick and choose which properties you want to invest in, and you can invest as little as 500 dirham and own a small piece of the property, and any returns that are generated whether it be income, rental income, or capital appreciation, you participate in those returns in proportionate to your investment. So we saw three main challenges when it comes to real estate investment. One is accessibility. A lot of people struggle because of large capital requirements. We make that accessible by fractionalizing the asset class and lowering the minimum entry. Second, we give you access to pre-vetted investment opportunities because a lot of people don't have time and knowledge to go out and find the right properties. And third, we provide you with all the market data, market information, our research, thanks to REIDIN, to equip you to evaluate those investment opportunities and make effective investment decisions, all in the convenience of your device. Very simple, easy process to invest. And all these opportunities are fully managed by our team or our third-party partners that we work with. So you sit back, relax, and collect rental income. Every 12th of the month, money comes into your wallet, which you can reinvest or withdraw those funds at your peril. So that's the background of the two companies. So what we're going to do in this webinar today, before we get started, I'm giving this out before. Usually I do this at the end, but I was told by my team, do it at the front in case people drop off or have to go and so forth. So if you're already a user on the SmartCrowd platform, you can go use this promo code at the time of investment and you'll get a 2% cash back. If you have not become a SmartCrowd investor yet, I would encourage you to go create an account. It's free of charge, no cost to create an account. And you can use this promo code. Take a screenshot of this. Please don't put it on Google and blast it out to everybody. This is specifically for you guys. You can use this promo code SmartTalk and you'll get 2% cash back at the time of your investment. It's valid for 7 days, so do take advantage of this.
So, Siddiq, I'll be back in 2 minutes.
Good one, Ozan. I think we have blacklisted you from the promo code. I'm just kidding. Ozan is also a great customer, and he can also share his stories. He's had a few exits on the platform as well, too. He's sitting happy there. But the reason we decided to host this particular webinar on this particular topic, we do these webinar series for educational purposes. There's a lot of questions that are being asked. Is this a bubble? What's going to happen? Are the prices going to continue going up, et cetera, and so forth? And we thought, let's have a session where we can show data and demonstrate as to why the market is performing the way it's performing. And to go back in time, so if you go back and you can go to our YouTube channel and look at our past webinars and so forth. And Ozan, I remember our first webinar when we did back in 2019, 2020. We from a data perspective, we had already identified some of these opportunities where it was all a matter of supply and demand. So if you go back in time between 2016 to 2020, the only headlines you saw: supply demand imbalance. There's too much supply, not enough demand, prices coming down. It was true to a certain point, but if you go back in time, supply peaked in 2017 in terms of launches being announced, et cetera, delivery. And since then, it had been on a steady decline. And we will touch base a little bit more on this. And we knew that was happening, but we knew the demand will continue to rise because the population is growing. And the government has done a lot of reforms in the last 2-3 years that we're seeing the benefit of that in terms of population growth. And demand can come, and we call this, the demand can come much quicker than supply can come on ramp. And then you will have an issue where you won't have enough supply to satisfy the demand. And that's what we're seeing today. And that's what's driving the market. This is fundamental demand that is coming in. There is lack of supply, the relevant supply in the market. And that's what's driving the prices higher in the areas where there is a lack of supply. So it's not across the board homogeneous where everything is going up in price. Majority of stuff is going in price, but there's pockets of areas that are performing much better than the other. And this is what we're going to try to answer and go through this webinar. As a common question that gets asked, is it the right time? Did I miss a boat? My advice to everyone, and this is a personal advice, not sponsored by SmartCrowd, is it's always a good time to invest, right? And the reason I say that, it all depends on your personal goals, your time horizons, and so forth, right? What's your goal, et cetera. If you're speculating and so forth, that's a different story. If you're investing for the long term, it's always a good time to invest. There's a very famous Chinese proverb that says, the best time to plant a tree is 20 years ago. The second best time to plant a tree is today, right? So with that, let's dive right into it, right? Ozan, 50,000 foot level view of the Dubai real estate market, 2 minutes, go.
Yeah, sure. I'm going to start from 2014. Basically, this is the second cycle of the market. Normally, we always start from 2003, inception of the market, like lots of investments, lots of construction. It was a construction frenzy, and then like very high rapid increases. Then 2008 crisis, etc. So back in 2014, actually, I can say between 2013 to end of 2014, there was fundamental changes happened between those years, where it was affected the real estate market. So we start to see price increases. However, fortunately or unfortunately, with the launch of Expo, again another frenzy started. So the prices increased rapidly till let's say till the end of 2014-15. And then after the rapid increase, we were expecting a correction, but this correction could be around 5 to 10%. However, the market, even though the transaction volumes it was still high, we see that market there was a drop of 20% in the next 2 years. And 2017, we see that the prices they start to stay on the stable line. We thought that generally what happens is prices increases, then stays on one certain level for 3 months, 4 months, 5 months. Then it doesn't it's not able to go up. Then starts falling, and it is vice versa as well. So back in 2017, we see that stabilization. However, we were wrong. The prices continued to go down. It is because of the huge number of supply came into the market. On an average, between 2016 to 2018, we were getting around, Dubai was getting around 60 to 80,000 new launches in the market. So of course, there is a huge correlation between the supply and the prices. However, there is a 2 to 3 years lag, because when you consider the supply launch, yes, when you launch it, you start selling as an off-plan, but it is not completed yet. So it doesn't it's not vacant in the market. It's not waiting for the renters. So the huge number of supply piled up. Of course, some developers, their appetite was very much high because of the Expo. They wanted to deliver all those units. Then this continued till the last quarter of 2019. Actually, the sales price increase, or let's say transaction levels to come back, it didn't start right after the COVID. It actually started in the last quarter of 2019. However, we had the COVID. With the COVID, there was a delay of 1 year, almost 1 year. Even though there were lockdowns in the Europe, in the rest of the world, we start to see some green shots at the end of 2020, and till date, prices have been increasing. Basically, we actually have to bifurcate the apartment and villa markets, because they are moving at a positive way, both of them. However, the rate of change, it was very different than each other. Everything started with the horizontal living spaces, the price increases. I'm talking about the villas and townhouses. Then spreads into the apartments. However, even when we tell about the apartments, even here there was another bifurcation as well. Luxury market, such as Palm Jumeirah, downtown, the luxury side of Dubai Marina, it was increasing at a very higher pace. I think we are going to see in the following slides, where the affordable and mid-market, even though there was an increase, the level of increase, it was subdued when we compare to the luxury market. On an average, back in 2019, quarterly wise, we were able to get the real estate transactions from Dubai Land Department. So we are able to track what's been happening on a daily basis. But on a quarterly basis, we were getting around 6,000 off-plan property registrations and 3,000 to 3,500 ready property registrations. Last quarter, it was 16,000 for off-plan, which is more than double, and 12,000 ready market transactions, which is more than 3 or 4 folding in by.
That's very important, right? The secondary market is extremely important because that demonstrates that there is demand and appetite for people to take possession today and not speculate on off-plan. Off-plan will always be there because of newer areas. People want something new, affordability because of payment plan. But the fact that people are buying ready properties today and the transaction volume is almost 2-3 times the average is demonstrating the maturity of the market where people are actually coming, taking possession. And that's probably driven a lot by not only investors, but a lot of end users coming to the market and buying and making those commitments, right? We started this webinar with a person asking a question, hey, I want to get a mortgage and buy a property. Mortgage transactions are all-time high as well. Isn't that correct, Ozan?
That's very correct because there is a difference in investing in off-plan and ready property market. You generally invest in off-plan properties to you're getting partnering with the developer by his risk, right? You're taking it, so that's why you're getting with a certain price where once the project is completed, you're expecting to get some capital gains. However, in the ready property side, where it actually shows how the market is mature, because you generally invest in the ready property market to live in, right, or to rent it out. So you're putting your money into something solid where you can hold it. So there is a starting difference between two different investments.
It's more predictable, right? In the sense that the beauty of real estate is provides you 2 kinds of returns, right? It provides you income return and it provides you capital appreciation return. So if you're buying something that's ready today, you start making money right away, right? So money in your pocket today is much better than hopes of money in the future. Not to say that off-plan is necessarily bad. A lot of people have made lots of good money on off-plan properties, but you can get caught in these cycles, right? And you don't want to be taking, I know a bunch of people that were taking possessions during COVID period, and they were really struggling because they couldn't get financing, they couldn't make the payments, and there was a lot of people that had to default, et cetera, and so forth. But people that got lucky where their projects got delayed into 2021, they were like, hallelujah, right? I want to take possession. You know what? Forget possession. I'll sell it because I'm getting such a premium and so forth. But you cannot control those things. Whereas ready property, income coming into your pocket, you can reinvest that and so forth. And majority of your returns comes from income, right? This is what we love about SmartCrowd, because SmartCrowd allows you to do that, where you are generating income. And as the capital prices go up, you can participate in that and you get a good total return. But before we move on, I want to sort of touch base on a couple of things over here into the cycle that you've talked about, right? And this chart on the slide clearly nicely depicts this, right? So where we had a very long, drawn out, I would say slowness in the market, right? Because it wasn't like a rapid drop correction and so forth. It steadily declined over a period of time. And what's really important to understand is what was the driving factors of this? Because it's important to understand that, because then you will understand why the market is going up. It's really important to understand that a lot of these challenges that we faced during 2014 to 2018 were not necessarily structural in any manner. They were more cyclical, right? If you go back in time, look what happened during those periods. We had the Qatar blockade. We had political uncertainty with the Iran relationship with the UAE as well too. Dollar was extremely strong versus other currency, making Dubai very, very expensive. And alternatively, all over the world, the interest rates were very low and people were buying right, left and center all sorts of assets all over the world. So people had plenty of opportunities, etc. These are cyclical problems. There weren't any structural problems. You can debate supply, demand that was there, but again, that's cyclical. That's not a structural problem by any means. But besides that, you have to give credit where credit is due in terms of the leadership of UAE and Dubai in particular. They've been working really hard to make lots of structural reforms, right? Mainly around one, I would say, talk about regulations perspective, from a land department, RERA perspective, a lot more transparency in the market, a lot more robust regulations that instills confidence in the investors. Second, the whole golden visa, the digital nomad residency, how well the COVID situation was handled, healthcare, etc. And all that, we're seeing the benefits of that today. And some structural reforms we'll see the benefit of in years to come. And that is what's driving this market, because that's also leading to a demographic shift. So historically, Dubai has been a relatively young city where it's getting built. And for that, you need to have a lot of labor to build the infrastructure and the city. So majority of the population in the past, a good portion of it was labor, blue collar labor.
Yeah.
Added very little economic value to the city, right? Plus they didn't need housing needs, etc., because most of them lived in labor camps and so forth. But most of the infrastructure is developed in the city, right? The city is there. It's a metropolitan, one of the premier cities in the world. There's still construction and development happening, but not at the pace that was needed, a decade ago. And with all these reforms, you're getting a lot of white collar labor coming into the market. So the demographic is shifting, where the blue collar labor as a percentage of total population is shrinking. Your white collar labor population has increased, and these people actually demand housing. They need housing. So that population increasing vis-a-vis the amount of supply hasn't really increased in terms of new supply coming on a yearly basis, but the population will continue to increase. And that's going to continue to support this market in terms of supply-demand dynamics from that perspective. And that's what's driving this market. And that's where, in my view, that gives me confidence on the stability of this price movement, especially if you have a long-term view, not necessarily short-term view, because a lot of things can happen in a short period of time. But from a fundamental perspective, in terms of what's driving this, these are some of the key elements that are doing that. And it's also reflected in the rental market too. If you look at it on the next slide, if I can get to it, the rent cycle also, right? Because that's what's driving the demand. The population is coming in, they need places to live. And despite that new supply is coming to the market, the rents are continuing to rise, that are further supporting the real estate prices. The yield in Dubai has actually increased, the gross yield, which is fascinating, right? With the prices going up, you would think the yield will come down because rent is usually a lagging indicator. It takes time for renewals to come in, etc. But rents have also gone up quite considerably during this period and continue to do so.
And when you look at the potential gain, still like 14, 15%, it's like, still there for the sales market, where for the rental, it is like, very narrow. So we almost reach 2014 levels. Also the interesting side is like, we generally see that like sales first movement starts with the sales prices. So sales goes up or goes down, then it follows by the rent market. However, this time it is like, a bit different, especially for the last 1 year. In the mid to affordable market areas, first we see the increases in the rental market. Then this is spreading over the sales market as well.
And that's because, like you said, right? So if you go back historically again, right? I'm a data freak. Like I love looking at this data. Quite sad, actually. But if you look at historically, there were two areas that always led what was going to happen to Dubai prices. One was Palm Jumeirah, the other one was International City. Historically, right? They were two. These were two typical areas that would be ahead of the curve, right? If Palm prices start going up, international prices are going up, it's a time to get into Dubai market because Dubai market is going to go up. However, this time around, it was Palm Jumeirah and International City did not move much at all, right? Yeah. Because it's, again, going back, the demographic shift, the kind of demand that people have, et cetera, and so forth. And to your point, right, luxury market really ramped up and the affordable market, et cetera, is playing catch up, right? As people are getting priced out, they're coming down, and you're starting to see pockets of areas that are starting to perform better this year than last year versus luxury, where that has sort of slowed down in terms of rate of change versus last year. And that's also driving the rental market up. So there's a lag of certain areas, which presents opportunities for investors to get into certain areas that haven't really seen that appreciation yet, that is yet to come, because you don't want to go into places that have necessarily gone up too fast, too quickly. There's still pockets of opportunities there.
I think we will get this question, like if there will be a price correction. Definitely there will be a price correction, but this price correction, it's not necessarily mean that prices fall down. But these two markets, they have to get closer to each other.
Agreed. And some softness, some slowdown is actually healthy for the market, right? When you say correction, the pace of increase will slow down. It will plateau, etc. Would there be some price depreciation? Potentially, but not significant given the level of demand that's coming to the market and the lack of certain type of supply where there is demand. So again, what's amazing about Dubai is, there's so many different areas, even within areas, different kinds of properties, etc. So you have to really do your homework before you make an investment. This is not something like you can buy an index of Dubai real estate and sleep at night. Everything performs very differently. So you really need to
do it every day, I believe.
you need to do your homework. You need to understand the supply-demand dynamics. And what's really, really important, especially when it comes to real estate, is when you make an investment, you have to make an investment with a view of long-term, right? You cannot get caught up in short-term speculation, etc. Because one, the transaction cost of real estate is very, very expensive, right? You have to pay land department fee, brokerage fee, trustee fee. It adds up, right? You're looking at 7,
around
8,
10%, 8% to 10%.
8%.
Yeah.
It adds up, right? So you don't want to speculate. You want to take a long-term view. And as long as you're buying something that's solid, good developer, good quality asset, it's making an income, you don't have to worry about price movements on a quarterly, monthly basis, because you're not selling it tomorrow. So you don't really necessarily, it shouldn't matter what's happened to the price today. You want to have a long-term view. So any softness in the market should be an opportunity. If you have a long-term view and you believe in the growth of Dubai, the population growth, then any softness should be an opportunity for people to take advantage of, for example. But let's move on, because in cognizance of time, I don't want to spend too much time on this, because I want to drill down to a few areas and sort of get a little bit more into the weeds. So we'll talk about, like again, Dubai is a very vast market, but we want to focus on a couple of areas, and we bucket them in two areas. Like prime areas, we want to talk about Dubai Hills, Marina, downtown Palm, right? And people can argue if these are prime or not, but let's just assume this is group one, where we're talking about these 4 areas. And in group 2, there are more sort of mass affluent, more affordable areas like Silicon Oasis, IMPZ, JLT, JVC. Business Bay should be in here, and it is in some of our slides, but it doesn't show up on this slide. So we want to talk about some of the sales trends in these particular areas. So if you look here, what's really interesting, as Ozan was already pointing out, that overall Dubai market is up 30% since the bottom. It's still 15 to 16% away from the 2014 peak as the overall Dubai. But if you look at the prime areas, downtown, Palm, Dubai Hills State, they're already surpassed 2014 peaks, right? Dubai Hills is an unfair one because it only launched post 2014, so you can discount that one. But the downtown and Palm is quite unique in the sense that the prices are already surpassing 2014 peaks. That doesn't mean that there is an upside left in there. It's just that there is a lot more demand for those, and there's limited capacity, right? Palm is Palm. It's been built. There's no more land on Palm, right? So that's also the scarcity there. That's obviously leading to the price increase there. And there's a lot more demand for it, a lot more wealth coming in. And same thing with downtown. Most of the lands in downtown have already been developed. There's only a handful of lots that are left to be developed. And majority of the handover is happening this year, I believe, in downtown, this and next year. And that's pretty much it.
Yeah.
So you will see the supply side later on in terms of I was actually quite surprised to see how little supply is actually coming to the market over the next 3 years in places like downtown, Business Bay, and so forth, because over the last 3-4 years, there have been so many launches there. And now it's all pretty much developed. where you're seeing this price appreciation across the board. So any thoughts on this, Ozan? Or we can move on if you don't have anything to add. Maybe you can talk about.
I have just one addition. Like even though like the most of the price increases in the we see in the in the luxury market, the main transactions were happening on the mid and the affordable segment.
Correct.
This is also like interesting part. But of course, like this has like lots of different like correlations. Because right after the COVID, especially like the international investors, they directly focus on the Palm Jumeirah, downtown Dubai. I mean, most of the people during the COVID, because of they couldn't like spend their money, right? The assets in the banks, it's like growth, so they had to pump it, right? So they selected like all these areas. They parked their money here. I think they did good job there. It is like very beneficial for them. However, going forward, it is like to be honest, like I don't think that it will continue this way.
No, the rate of increase will have to plateau, right? Like if you look at the rate of change over the last 18 months, month-on-month change, it's phenomenal how consistently we've been over 1% increases per month for a very long period of time, right? So that rate of change will slow down. It has to, right? It'd be great if it continues, but some softness there is healthy for the market. When you say it's not going to continue, doesn't mean the price is going to go the other way. It's just that the curve that you see won't be as steep anymore. It will start plateauing out, which is not necessarily a bad thing, right?
It's actually like healthy market, like stable prices where it is moving
with the market. Exactly.
Yeah, GDP rate.
Also because the off plan is very limited in those areas as well too. So it's going to be the secondary market that's going to be transacting mostly through cash purchases or through mortgage purchases. One thing I want to highlight over here is Dubai Marina, right? People would think they'll look at this number as like, well, Dubai Marina hasn't done as well as downtown Dubai and so forth. And there's a reason for that.
Actually, we have to divide Dubai Marina into the districts as well, because southern part where generally affordable apartments are located. In the northern part and the GBR, it is like more luxury. However, like when we spread the over the numbers, the mid market, affordable to mid market, it is like higher. Otherwise, if we just like analyze the new properties or luxury properties, the price increase is actually catching up the
agreed. And this is what I say when you do your homework, right? Because it's downtown is very simple, right? Majority of 90% of downtown is MR, right? So that's very easy. It's one kind of quality of product, brand, etc., and so forth. Palm Jumeirah is Palm Jumeirah. In Marina, you have a mixed bag, like you said, right? You have tier 1, tier 2, tier 3, right? And there's quite a bit of tier 3 in there as well too. That will obviously drag the overall average. That doesn't mean Marina as a general is not doing well. Pockets of Marina has done really well. We have a portfolio in Marina that has performed. We've done a few exits in Marina that we can talk about, where we're talking about 60% plus returns on there. So again, you have to do your homework to understand what kind of property in what area works really well. But then also it also points out that there's an opportunity in Marina because prices haven't necessarily exploded as much as other places. And Marina is Marina, right? It's a relatively well-known area globally speaking, right?
Lots of amenities, downtown, attractions,
Marina, Marina, 2 metro stations, beach, Dubai Eye. I know it's closed at the moment, but it'll eventually open up again. But it'll continue to be a tourist hub and an attraction, and there are opportunities there as well too. This off-plan stuff is also quite interesting, but let's skip on this because of cognitive time. Let's go into the affordable. Where am I here? Let's go to affordable areas, right? And let's look at the prices over here. Again, here, if you look at it, again, we talked about Dubai on a whole, up 30%, 15% away from the 2014 peak. But in the affordable areas, there's 2 areas that have gone through the roof, right? Business Bay and JVC, right? And the others, they have lagged. But we'll see in the next slide on a year-on-year change, and these places are catching up now, right? So there's opportunities over here to play. But Business Bay and JVC are very interesting areas because these are the most transacted areas over the last 4 or 5 years, consistently. Number one, number two, number three, I believe, top 3 areas in terms of, and mainly because of a lot of off-plan projects were being announced in these 2 areas, because these things are relatively newer areas, and now they're being all handed over. And just the volume of people migrating to these 2 areas, both in terms of people moving to live in there, and we'll see some statistics on that later when we look at the rental contracts, but also transaction volumes are still high. In top 3 areas, I believe these 2 areas come in the top 5 areas, the most transacted areas, particularly in apartments. And that's really driven the price. And this is where, I tell people, supply demand doesn't matter if supply is coming in an area where there's demand to absorb the supply, right? If you're putting supply in an area where there's no demand, obviously you're going to have a negative impact on the price. JVC and Business Bay are a testament to demonstrate you can throw a lot of supply in the area as long as there's demand, right? And that will support the price movement. As you can see in Business Bay, it's probably one of the largest supply deployment in the last 4 or 5 years. Ozan, if I'm not mistaken.
I think we have to add for the new supply, the quality supply, because correct. JVC, if you consider the JVC with the last 10 years perspective, most of the existing developments they were extremely affordable and generally very skewed apartment blocks, right? There are a couple of clusters that I know, like Emirates Gardens, Diamond View Towers, etc. However, the new supply, new additions, they are actually kind of luxury, and you're getting luxury property at the price of, let's say 30% off than the luxury in the Dubai Marina. Or downtown Dubai, right?
100%.
And most of the developers, they are very well known branded developers, and they actually they come with the different designs and all. I think this is the most effective way.
100%, right? One thing I've learned over these 2 cycles is, as long as you're buying quality, you can never go wrong, because it really holds its value and it appreciates really well. And we've seen that in the last 2 cycles. When you talk about quality developers, for example, in JVC, Ellington, a premier developer, is probably one of the top 5 developers in the city. Iman developers of all the Oxford buildings, Hayati,
Zaya.
So all these, if you look at them, one, the product is just amazing. Second, they've actually traded a premium, massive premium to the overall market, and have really appreciated in value significantly, right? What's amazing is, and also these are old, some of the stuff is very, quite old, right? Relatively speaking. Like, for example, in JVC, Belgravia 1, which was Ellington's first project, right? Back in 2014, 2015, I believe. So relatively old compared to the new stuff. The studios in JVC in Belgravia 1 are over 700,000 dirhams. Right? That was like Business Bay prices not too long ago, right? But it's also a larger unit because they don't make them as large anymore. They make them much smaller now. But the quality stuff, and when they were off plan, when they were launched significantly lower, right? And during this period, people have made rental income on it, and they've seen a significant capital appreciation. So if you buy quality assets in the right location, you have very little to go wrong with, right? And this is also showing in the data in terms of what JVC and Business Bay are doing from that perspective. JVC has really, and we'll see later on in terms of the migration happening to JVC. If you ever drive on SS Street around 8 in the morning or after 5 p.m., that whole Hessa Sakim corridor heading towards JVC is quite busy because of a lot of migration, people moving there because of a lot of amenities in those areas. But I want to touch base on these other areas, JLT, DSO, IMPZ. They've all seen very healthy appreciation, but they have a lot of room to go to the 2014 peak because they haven't, I want to show the next slide because you'll be able to see in terms of year-on-year change. As you can see in 2020, 2021, 2022, there wasn't much increase in these areas, but in the last 2 years or this year, you're seeing massive increase in prices in these areas. So they're playing catch up, because as people are getting priced out, they're coming here for affordability reasons and starting to buy these units. And the rents in these areas, if I can, I think I have, I'll try to find the rental increases as well too. The rents have really increased substantially in these areas. It's driving the sales prices in this area.
Yes, interestingly, when the new supply coming in, normally you don't expect that much of rental renewal. We are able to track both the renewal and the new rentals.
Correct.
So back in 2022, 2022, mostly like on a city level, not on the JVC or Business Bay, we were getting more new rental contracts because prices were going down, and most of the renters, they were able to find better affordable places, so that's why they were moving in. However, in the last 1 year or 2 years, because of the rentals are going up, people they want to stay in their place, not having lots of rental increase.
Hold that thought. We'll come to that in a second. I want to wrap up on the areas, right? So, and I really want to talk about JVC because I think it's a very underrated. People don't talk about it. They don't think about it from an investment perspective. It's a great place. Mm-hmm. We'll see the rental transactions up there. But as you mentioned, in terms of quality assets, right? Some of these quality products that are there, if you take that product, right? Today, that quality product, a 1-bedroom in JVC is 1.1 million. You take that same property, you plop it in Business Bay or downtown, that will sell for 1.8, 1.9 million, right? In terms of size, the quality, the amenities, it's second to none. It's just amazing in terms of how well these products have been developed in JVC, and you're getting a really good price relatively to the size. So as a price per square foot, it's still very attractive, whereas downtown Business Bay have gotten close to 2,000 dirhams per square foot. JVC, the prime JVC, is trading between 14 to 1,600 dirhams per square foot, which is relatively in the average Dubai. What would the average Dubai be, Ozan? Price per square foot, about 14.
When we 1,400.
1,400.
Average
right? So
Dubai.
Right about that average Dubai. Right? So and I want to touch base on this a little bit because this shows the split between ready and off plan, right? So as we talked about in Palm Jumeirah, downtown, majority of the transactions that are happening are ready transactions because there's very little new off-plan projects that are coming in, especially in places like Marina and so forth. That's the other reason Prime have done really well, because there's limited supply to be developed there. Hence, people can only buy what's available. And, there's not a lot available in the market, especially if people are looking for vacant opportunities, right? There's very little vacant units available, and that's what's driving the price. And as you can see, majority of the transactions that are happening are ready transactions. Obviously, Dubai Hill State is a new development, so they'll continue to have more off-plan sales versus ready stuff. Similarly, in affordable areas, again, like I said, JVC, Business Bay, majority of that, a lot of off-plan projects. So Business Bay is in a significant decline in terms of new projects because there's very little projects coming online. JVC, there's still projects coming online because there's still some land left. So we're still seeing that. But that also demonstrates people's willingness to buy, long-term supply in a place like JVC because they believe that JVC is going to continue. For example, Danube just launched a new project in JVC, Elite's, selling studios starting at 650,000 dirhams, right? I remember a time in JVC where studios were like 300,000 dirhams, 400,000 dirhams. So that's just if the new stuff is coming at that price, guess what's going to happen to your quality ready stock? That's going to move in line with new supply that's coming into the market. So we continue to see that relationship continuing on from that perspective. Again, the same reason the prices have gone up, the rents have followed suit, right? Or Ozan said, rents have sort of led the way for price movement as well too. So on all these prime areas, rents are already beyond the 2014 peak, right? And I feel all of us in this webinar are feeling the pinch right? When we have to pay rent. So that's also necessarily a bad thing, right? You can invest in real estate and hedge your rent, right? That's what I tell people. That's what you should do. It's a natural hedge. Invest in investment properties, take the returns, subsidize your rent from that perspective. But that's healthy, right? That's very healthy that the rents are high, supporting the pricing. And again, we talked about there's limited supply in these areas, so there's not much more supply coming in. So it's not going to have a lot of negative pressure on the rent. The only thing that's going to make a difference over here if the demand starts wavering off. But we don't see demand wavering off for places for people wanting to live in Palm, people wanting to live in downtown, people wanting to live in Marina. And it's not just living. What's really interesting, we haven't really talked about this, is short-term temporary accommodation as well too, because you have a lot of people that are coming to the city on a temporary basis, right? Digital nomads, or people that are looking for a job, or people that are coming over here setting up businesses, or people that spend 3-4 months over here and few months in some other country, in their home country, and so forth, and they like to be in these hotspots for temporary accommodation. So maybe people are not necessarily renting these long-term, but there's a lot of demand for people to come here and rent a place for like 3 months, 4 months at a time, and so forth. So a lot of investors are buying in these places and letting them out on a short-term basis, not necessarily a holiday home on a daily basis, but on a monthly, weekly basis to sort of shorter-term temporary accommodation and so forth. And we're seeing a lot of that, not only in these areas, but also in areas like JVC. JVC has become a very big hotspot because of certain key areas, key properties like 5 Hotel in JVC. That's attracting a lot of tourism, younger demographic, people that are coming into town for new jobs, etc., digital nomads. They all want to live in JVC because it's becoming a very happening place. And some of the buildings, there's one building, I forget the name of the building, but it's amazing amenities. It's set up as a nice accommodation, but in the lobby, they have this beautiful co-working space, games rooms, and so forth. And that developer, he hasn't sold it. He's kept everything to himself. He's killing it in terms of how well those things are renting. Sorry, this is the price increase in the rent. As you can see, the rents have really gone up, particularly in last year. They really shot up in the sort of the prime areas, and in the affordable areas, you're also seeing this, right? JVC, Business Bay, again, a lot of demand coming in there. There's still room for increase in some of the affordable areas where we have properties in JLT, DSO. We're seeing a lot of increase. On average, our portfolio, everything that we renewed 15% or above, which is fascinating. And as you can see, year-on-year change, even in 2023, you're seeing significant increase in affordable areas because they have lagged. You haven't seen such. So if you go back, you look at the rapid increase in 2022 in the prime areas. You didn't see that rapid increase in affordable areas. So you continue to see double-digit increases in 2023, and will continue to do so as people get priced out and new population comes in. They want to go and move into more affordable areas, etc. And we're seeing a lot of demand from that perspective. So this is what you were talking about: new versus renewed rental contracts. And I think this is very telling slide, right? Because as you can see, majority of the people, especially in Marina, are choosing to stay. So that's actually a lot of people are actually moving into these areas. So I'll let you talk about this, Ozan, because we're talking about this in terms of new contract versus renewal contracts, rental contracts. Do you want to talk about this, Ozan?
Sorry, my connection, I think I lost you for 5 seconds.
Okay, no, so I was saying you were talking about new and renewal contracts, right? So this slide shows the percentage of new contracts versus renewal contracts in the prime areas.
Sure. What I was saying, 2-3 years back, while the rent prices were falling down, most of the renters they were looking to get different units to reduce their rental costs. However, in the last 1 year or 2 years, because of the rental prices are increasing, they tend to stay in the same place because on an average, based on the rental calculator, RERA's rental calculator, there are like, some brackets, right? 5% increase, 10% increase. However, if you vacate your unit and get onto a new unit, most probably you're going to end up, paying maybe 30%, 40% more. That's why when we bifurcate the rental contracts by the new and renewed, we have seen that renewed transactions are, much more than before.
Yeah, they are increasing in pockets of areas, right? Like you're still seeing some demand coming into certain areas like Marina. You're seeing, more new contracts, but places like Palm, it's more renewals than new. Dubai Hill State, more renewals than new.
Yeah, those are some of the areas like there are like a new supply coming in. It is normal to see like new.
What's going to be interesting was on next year, right? Because a lot of these people are getting eviction notices now, right? So it's going to be interesting, this graph next year, as to how many new we will see. But in the affordable areas, what's really fascinating over here, we don't have the business bay over here. I would love to see the business bay one. But if you look at the JVC, look how many new contracts over the last 3-4 years. It's fascinating, right? And that demonstrates of population growth in JVC, right? There's no question marks about that. The population has increased in JVC. With the supply coming on, the demand is there, right? I'm really, really amazed as to how well JVC has performed. Even if you go back, the 2014 to 2020 drop in prices, on average, Dubai prices dropped 30%. JVC only dropped 15%, because even during that time, people were migrating to JVC. There's Al Khail connectivity, there's the 311, there's 2 malls over there. It's close to all the major schools. It's a really good area. And some of the products like we were talking about, of the quality of assets is really, really positive. I'm going to end on this one slide, and then we'll open up to Q&A because it's already 7 o'clock, and we don't want to make this too long. What I want to point out over here, Ozan, is the supply addition that's coming into Dubai over the next 3 years. Where are people going to live, Ozan? There's nothing. There's nothing. Look at it.
Normally, we were getting around like 60,000 to 70,000, launches till 2019. Between 2019 till 2023, on a yearly basis, it was around 20,000. So there is not much like, stock that is going to come into the market for the next 3-4 years. Which areas? Interestingly, like, we will get like, still JVC, Business Bay, within the, affordable areas. Also, beyond the Sheikh Mohammed bin Zayed, road, we have seen like, lots of, new villa communities, and as well as the Dubai South.
Yeah.
Those areas.
Correct. So this is very important, right? For people, right? People that ask, is it too late for me to buy, etc. But this is the data. Look at the data, right? As a percentage of supply, look at it. It's decreasing substantially between this year, next year, and the year after. And even if anything that's being launched today is not going to get delivered for another 4 years, 5 years. So Ozan mentioned, on average, we were getting 60 to 80,000 of new units every year on average, of launches, not deliveries, launches. Yeah. Because historically, the realization rate, meaning of what gets announced to what actually gets delivered, is about 45%. So if 80,000 projects or 80,000 units are being announced, effectively only 35,000 are being delivered, right? So, but that 80,000 has now become, Ozan said, average of 20,000 units only, right? So that's a substantial decrease. And what's happened to the demand? It's gone the other way. And it's continuing to increase. Dubai is working towards increasing the population to 5 million and then 10 million over the next, couple of decades. And supply is not keeping pace. And what's going to happen there is you're not going to have enough supply to satisfy the demand. And that's going to continue to put upward pressure on pricing, on rentals, etc. To your point, again, Dubai South, Emar South, these areas, again, coming supply is not necessarily a bad thing. If you're putting supply in areas where there's demand, it will perform well. JVC, Business Bay are a prime example. And with Palm Jabal Ali coming back online, World Trade's Maktoum Airport also being pushed. The DXB will eventually move to DWC at some point in time. all that area is going to get developed, and it's relatively very underpriced relative to the rest of the city because it is a little far out at the moment. But in 4 or 5 years, it won't feel very far out. And if you have a very long-term view, those are not bad opportunities to get your money in there, buy something relatively cheap, relatively affordable. I don't want to say cheap. Cheap is the wrong word. Relatively more affordable. It's renting relatively well because it's more affordable. And capital appreciation in those areas is potentially quite significant, right? I'll give you an example. Like in Namar South, you can go buy a 3-bedroom townhome for around 1.5 million, a 4-bedroom just under 2 million. You're not going to find those prices in the city today, right? Today, if you want to buy a 4-bedroom townhome or a villa in Dubai, in Central, it's 4 million plus, right? You're getting to something at a half a price, and it will, in Namar South, you can rent that for 120 today. 120, 120, 130, you can rent it today. And if you buy that, you're making a good 5-6% yield on it. It could double in value in 4 or 5 years, right? So these are some things to—
There's a huge, growth potential.
Some stuff to consider. Obviously we don't have enough time to talk about every single little thing here, but I hope this gave you a sense of where the market is, what drove the market down, what's driving the market up, and whether this is sustainable or not, right? Obviously, there's a lot of fundamental reasons, structural changes that have happened that is providing support to the market and continue to do so. Long-term view, very positive. The rate of change might slow down in terms of increases, but it's a relatively healthy market, not very speculative, based on data. This is not personal opinions. This is purely based on data that we have presented to you today. That based on data, the fact that more ready properties are being bought, more end users are buying, mortgage transactions are up. These are not speculative driven market compared to the previous peaks in Dubai. So I'll end it over there. Ozan, I don't know if you want to say any ending remarks before we open up to Q&A. We have a lot of questions here.
I just want to add maybe 15 seconds. Dubai market is much more mature now. Total number of units, it's been increasing, and we generally compare ourselves with the past data, right? 2014, 15, 16. Back in 2014, the total number of units in the freehold areas, it was 400K. Now it is 700. So in order to increase 1% in terms of value, actually it is not the same increase. So that's why it's going to be much more healthier when the population also increases. Still, I'm expecting some small correction, especially in the luxury market. And till when the market is going to pick up, I was generally giving the answer of end of 2023. We are expecting this trend to continue. However, we change it by the end of 2024. Probably it's because of the less number of supply coming into the market.
That's fantastic. So, I think we'll end it over there. We'll give it 5-10 minutes for Q&A, and then we'll wrap it up. There's one really question that came up. I think it's a very relevant question I want to touch on. Anuj asked, is it a good time to sell your property in Dubai as the market has rallied up so much? I struggle with this question myself, right? And I'll tell you why that's such a hard question to answer. That's great. Prices have gone up. I can sell. My entry point is over here. Prices are over here. Rents are over here. I'm making a pretty good, healthy return on this money. If I sell, where do I put my capital? Where do I redeploy? So it's a very difficult question to answer. So my advice would be, it's all about opportunity cost. If you sell and you have something else, you can put that money to where you can make as much return or have potential to make more return, then do so. Otherwise, continue to enjoy the returns that you're generating. Because if the prices have gone up, you probably bought it 20, 30, 40% cheaper. Rents have gone up 20, 30%. So your yield has really increased. There's no point. So for example, if you have a property in Marina, you're selling in Marina and you're buying in Marina at equally elevated prices, it doesn't make sense. Perhaps you sell Marina and you buy something that hasn't performed really well, or it's lagging, or it's playing catch up, maybe a different area for a different kind of exposure, or you go out to Maidan, which is a new up and coming area, or you go to Dubai South. You can think from that perspective as to, okay, if I sell this, where do I redeploy that capital to ensure that I can make that return? Because if you're just selling and buying property in the same area, to me, that doesn't make much sense. And this is why, as SmartCrowd, we're starting to look at newer areas. You'll start seeing a lot of this on our platform as well too. Places like Maidan, places like Imar South, Dubai South, because as we are exiting some of our properties in Marina, JVC, downtown, we want to be able to allow investors to invest in new and upcoming areas where there's more potential for capital appreciation, opportunity for more rental appreciation, and so forth. We have moderators over here. I don't know if Nan and you guys have filtered down any questions ahead of time, or do you want me to just go through questions as much as I can over here? There's questions about transaction costs in property in general, and particularly on SmartCrowd, et cetera, as a percentage of property price. They can be as high as 9, 12, 13%. But you have to understand as to what are those costs, right? The reason some of the costs are very high, these are fixed costs, right? So there's a land department fee, brokerage fee, trustee fee, NOC fees. These are just fees that you have to pay, right? And this is a reason you want to make a long-term investment because it takes time to recover those fees in terms of price appreciation. The other reason also is SmartCrowd, we tend to furnish a lot of these properties, and we have witnessed that by furnishing them, you're getting 15, 20% more in rent. So you recover that cost relatively quickly because your rent is substantially higher. So you recover that money relatively quickly. I mean, you sell it as a furnished unit, etc. It attracts the investors because it's easy for them to put that onto rent as well too. So it does play quite well in terms of recovery of your return. Adnan, you want to throw some questions at me, or you want me to just go through the list?
I'll throw some at you, Siddiq. All right. So people are highlighting, real estate markets outside of the UAE, Saudi Arabia, UK. Any thoughts around that?
In what sense? So Saudi Arabia is an exciting place. A lot happening in Saudi Arabia. That market is still relatively opaque. It doesn't have the same level of transparency that we are accustomed to over here, rules and regulations. Saudi is doing a lot of effort in changing that, and that's going to drive a lot of opportunities in the medium to long term. So if you have the appetite, the risk appetite and means to get into Saudi market, it's almost like you have the opportunity to invest in Dubai back in 2002, 2003, right? I wish I can go back in time, right? I always ask my dad, what the hell were you doing in 2002, 2003? But it takes a bit of courage, right? Because it is a risky proposition. Stay tuned. SmartCrowd is, in the process of going live in Saudi very, very soon. You will be able to invest in Saudi market through our Saudi platform. Stay tuned on that. I don't want to give away too much, but it's coming. And we're at SmartCrowd, we're quite excited about that opportunity because I think, the rest of the world is itching to get into Saudi and put some capital there. In terms of UK and other developed markets, the challenges over there, if you contrast this to Dubai, Dubai is predominantly a cash-driven market. The mortgage transaction is a very small percentage of the market, where you look at UK, US, a majority of the market is mortgage transactions. So with interest rates increasing, it has a very bigger impact on rate increases. Whereas in Dubai, you don't feel it that much. And the disposable income over here is higher. So it has ability to sustain sort of interest rate hikes, which we have witnessed over the last 2 years. Whereas in the UK, US, you have those problems. And you have some other structural problems around debt and so forth, household debt in those markets. But those are mature markets. They haven't been, they obviously from, almost from the financial crisis until, post-COVID, the prices have been on a tear in those markets. If you look at it from a risk reward perspective, prices have been going up. There's a big air pocket for them to correct, whereas Dubai is coming out from the bottom. So from a risk reward perspective, you need to think from that perspective. Again, but if you're thinking long term, you got to take a view on these things. I don't study those markets as closely as I study the Dubai market. That's all I can comment on that at this stage, unless Ozan, you want to add something on those markets.
In terms of prices, we see that like in Germany, Berlin, UK, London, and New York, the prices between 2019, 2021, like right after COVID, till date, there was around like 15 to 20% increase. So it was like considerable amount of increase. But in general, I'm attributing this to inflation. Inflation rates are like high on all the countries. Interestingly, Los Angeles, the prices in Los Angeles, it was doubled. So if you have invested in Los Angeles, I mean, you would get like a good amount of return. However, all these like four cities in the last couple of quarters, we see price corrections where some of them they are like on the downward trajectory.
Fair enough. Let's do 3 more questions and then pick the best 3.
Siddiq, there's a lot. I mean,
we'll do another webinar just
5 minutes to pick just for questions.
Let's okay, everyone's over here. We'll do 3 more questions today, but quite a bit of participants over here. So I'll ask my team here to organize a live Facebook Q&A next week, where all we'll do is just Q&A. So we'll organize that for the benefit of everyone. I just don't want to take too much time of everyone's evening on a Wednesday. I'm also committed to another occasion. So, but let's take 3 more questions, Adnan. Let's try it.
I mean, can you highlight liquidity in general, exit strategies when investing with SmartCrowd, real estate in general, please?
Yeah, no, of course. So SmartCrowd we have 2 forms of exit options at this stage. One is a collective exit, where all the investors decide they want to exit the opportunity. We've done 9 exits with an average return of close to 40%, annual return about 15-16%, which is quite substantial for real estate investment. Obviously, past returns are not indicative of future results, but that's one exit form. And the second form is secondary share transfer facility, where we do allow people to sell their shares on the platform to other investors. It's considered an exit window, and we offer exit window twice a year. That obviously is going to develop over time as more and more people participate in that. Historically, we have only allowed people to list a price, and it's take it or leave it kind of an option. And this time around, in our next iteration, we're going to allow people to actually offer a price to the seller as well too. So people decide how much they want to sell it for, and they can do so in that manner. So that's the 2 forms of liquidity. We've done 2 exit windows so far, and every time the volumes have increased. And our third one is expected in September, end of September, and we're quite excited about that. We do anticipate more liquidity on this one, and the platform is much bigger now with more users, more investors. So as more investors come to the platform, it will create more liquidity over time as well too.
Let me take one of the questions. Where is the big inventory in terms of townhouses and villas coming in Dubai? It's coming by 2024 to 2025. It is like mixed communities, but generally in the Mohammed bin Zayed Road corridor, actually beyond like Arabian Ranches Phase 3, Tilal Al Gaf. Those are the also Dubai South. Those are the main communities, and will be delivered by 2024 to 2025. For beginners, would you suggest investing in affordable area or prime area? I would suggest investing in SmartCrowd with a
Good
small.
You can come on SmartCrowd and you can get exposure to both types of opportunities. But again, right, when you're investing for yourself, what you want to do, what I talked about earlier, the first question Kartik asked before we got started, is whatever investment you do, position yourself that you can hold on to your investment regardless of the cycles. So don't overextend yourself too much, where you're taking on too much risk, leveraging yourself too much, etc. Because if things don't go in your favor, you don't want to be in a desperate situation in that scenario. So whether it's affordable or prime, etc. The beauty of SmartCrowd is, it allows you to diversify your real estate exposure instead of putting all your money in one asset. Nothing wrong with that. It's just that if you can tolerate that risk, great. If you can't, you could put the same amount of money on 5, 10 different properties on SmartCrowd platform. Ozan can speak from his experience. He's built a nice little portfolio on our platform. He's got a few exits as well too. You want to speak about one of your exits, Ozan, on the platform? I know you were in favor of it.
I'm a long-term investor, so I generally don't purchase it and get the capital appreciation and sell it. By the way, I'm also home owner by myself, and currently paying lots of mortgage interest. So that's why I'm paying it off. When the exit was there, it was good timing for me because I was able to allocate that amount into to my mortgage. The good side is everything is transparent, and you know what you're going to pay when you get in, when you get out, as a customer, right? This is important. And every month, it was great to get the kind of statement, what happened, what is happening even with the tenant or whole days home. So I'm quite happy.
That's good to hear.
Hopefully, once I finish the mortgage off, I will be back. I still have some investments, by the way.
You still have some investment. That Marina one was a good one. It was a Marina Views, if I'm not mistaken.
Marina Views, yes.
It was almost 67% return, total return, if I'm not mistaken.
I wish I had invested 5 million.
Me too. One last question, Adnan, and then we'll call it a wrap.
Sure, Siddiq. If you can highlight the differences between what we do as a real estate crowdfunding platform to other platforms in the region, perhaps.
Yeah, so listen, the market is very big. Competition is fantastic. It gives people choices. What's important thing that you have to do is when you're comparing things is really understand the returns that are being offered. What are the costs there? Just don't look at the surface level. Go do your homework. Go do your research because unnecessary costs can really kill your returns. So really understand that. Compare different service providers from that perspective. As this webinar demonstrated, we are very data dependent. I think that's one of our key advantages or competitive advantages, that we're very much data focused. We see a lot of trends ahead of time because of the data, and then we make focus on not necessarily lifestyle choices, but more so from a purely investment perspective. What I mean by that, I'll give you examples of, we have bought some really affordable areas that I can assure you, if an average person walked in that building or that unit, they would never touch it because they will think purely from an emotional perspective, I don't want to live over here, etc. But purely from an investment perspective, it makes a great investment decision because there's a demand for these kinds of things in Dubai. There's a certain kind of demographic that requires these kinds of opportunities. And we've bought those for our investors, and we've made some substantial returns on those properties. So very much data focused, return focused, rather than lifestyle choices, looking at trophy assets like Burj Khalifa apartment and so forth, without necessarily thinking from a return perspective. Am I going to really make a return on this, or am I just investing this for bragging rights, saying I have an apartment in Burj Khalifa? I think that's the key differentiator between us and other competitors in terms of our thought process. Our track record speaks for itself. We have done more exits than anyone else. We've given out 8 million dirhams back to our investors in returns. So that really speaks volumes to our track record, how we've been performing. And what's really amazing is 80% of all transacted value on our platform has come from repeat investors. So people that use our platform love it, and they continue to reinvest onto the platform. Unfortunately, we'll have to cut it off over there. Thank you so much for your time, everyone. I hope you enjoyed this. You learned a few interesting things. I learned a few things from Ozan. Ozan, thank you so much for your time.
Thank you very much for having me.
Given the level of participation over here, we'll look to do another one very soon. Do write to us at info@smartcrowd.ae if you have any questions. Give us any thoughts of any topics you want us to cover in webinars. We'll try to host a Q&A, live Q&A on Facebook or Instagram over the next couple weeks. And lastly, if you have not checked out SmartCrowd, please do so. SmartCrowd.ae, or from your Apple Store or Play Store, download the app. Check us out. Open up an account. It's free of charge. use this promo code to make your investment. If you haven't made first investment, we're giving you 2% cash back, which means if you invest 1,000 dirhams, we'll give you 200 dirhams back. So you're effectively investing 800 dirhams. So in more layman terms, imagine you're buying $1 million dirham property and you're actually paying 900 and what's 2% less of 1 million, 998,000 dirhams. There you go. You save 2,000 dirhams from that perspective, relative terms. Thank you again, everyone. Have a good evening. Thank you, Ozan. We'll speak soon.
Thank you.
Thank you, guys.